Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know about crypto for the next 24 hours and hopefully the next few days. Today, we are looking at our usual DXY to start. As you'll notice, we are dropping back to this support level right around 104.6, which was the previous high back in late May, early June. You're not seeing too much of a bullish reaction out of equities or crypto. Obviously, Bitcoin's still, in a bit of an ascending triangle formation. So still looking a bit bullish there. Equities obviously recovering off the lows here. So this does set up risk to definitely move higher depending on what the FOMC decision is today. But we also have to remember that the FOMC decision is today, and could this just be dropping to trick people into getting a little bit too long before FOMC, or this could also be a signal that maybe we're going to pump into FOMC. But I would be precarious. I would be cautious about this because I'm not expecting too much of a dovish opinion from Jerome Powell. If you think about it, CPI and PCE have not obviously been decreasing. The trend is still valid, but with energy, looking like it wants to continue to increase or could at least stay constant, especially with the OPEC cuts and such. It doesn't really paint the rosiest picture. Bank of England just did their 14th consecutive hike. So it's tough for me to say that Jerome Powell wants to be a dove, although I know many people want him to be. It's just tough to believe that story. So in my opinion, maybe this drops back to these lows, but I would expect some volatility, maybe a nice Darth Maul candle. If we all know what Darth Maul's lightsaber looks like, so maybe DXY does something like this during FOMC, drops down, pumps back up, and then ends up right back kind of to where it was, and then starts kind of creeping higher. So just be very careful about picking directionality before FOMC, because we know that the meeting in which Jerome Powell, or not the meeting, the press conference in which Jerome Powell speaks at 2:30. The announcements at 2, the pressers at 2:30. So whatever happens in the presser at 2:30 will be what our momentum looks like. So let's look at equities really quick. Let's see, how the day may play out. So this definitely looks a little bullish to me. Got the nice little tap off the weekly VWAP. We did, does look to be a confirmed deviation to me. Very similar to kind of what we saw, last time, and we jumped up, we dropped back down, we tagged, the support level, and now we're moving higher. So I would kind of put us in very similar to this position here. So we could, maybe drop back down again, and move higher, and then, or we could, kind of just creep up here before FOMC, get above the 1 hour estimated trend to moving average, which clearly, did signal some longs earlier, but then we deviated, right back under it, and obviously with bearish price action. And we did that again, on the same kind of boost up here too, and then we, dripped back below. So it's tough to obviously pick any direction or predict what's going to happen, because I don't know what Jerome Powell is going to say, and that is going to be the decider for momentum. But I will say, it does look positive right now. I would be shocked if we didn't at least, try and break above 4465. Maybe jump up to 4485. But any weakness, actually, I think this is wrong. Any weakness in this area right here, I would look to short. So if we spike up and then spike back down, that is weakness, and then I think you can look to short, down to these lows, especially if we break back beneath this level again. So I wish I had a little bit more of a clear read for everybody, but this is very tough sledding. And if we even zoom out a little bit, let's go to the 12-hour. We can see, kind of bullish, but if it gets rejected here again, then we will just end up, dropping back down, in my opinion. And we still have this, this 12-hour estimated trend moving average that has not been tapped. We still have these lows from down here that have not been met. And there's obviously nothing insanely bullish about the economy or earnings in the future. So tough to make me think that this really zooms higher, but it is in a position in which you would long, with a stop down here. But the weakness in this little area definitely scares me. So well, basically what my prediction is higher into FOMC and then lower after FOMC would be my guess. So looking at Bitcoin, kind of thinking about that same thesis, anyone who was, shorting last night, definitely got a little bit rewarded this morning. But, one of my favorite indicators, the weekly VWAP. I mean, look how many wicks every time it broke beneath the weekly VWAP, it was bought back up. And obviously, some ugly candles here, but we had this beautiful tweezer in the 5 and 6 a.m. and then we had another tweezer in the 8, 9 a.m. So this does look, positive, at least in the interim term. So if you can get above, the previous daily close, I definitely think you can still grab 27.5. But kind of thinking that same thing of equities, maybe we zoom up and then come back down in the same breath. And remember, yesterday we talked about this triple tap, and we predicted things would eventually head lower, and they did. The lows, well off, when we spoke yesterday. Bitcoin was hovering around here, but obviously no follow through. So if you're still short, I think you're a little bit misguided today. But that doesn't mean shorts won't look good in a certain area. And another thing that I find interesting is a lot of this OI, we're kind of back to the same level. This OI has just been kind of gradually pulling off. So maybe we get one more push up and then longs close. Our OI gets sent back here, and then longs end up sending us kind of back to maybe 26.8. Maybe even our longs closing, I should say, maybe even sends us back to kind of sends us back to the weekly low. Remember, this is the weekly high, this is the Monday high. Now this is the weekly high. And then this is the Monday low, also the weekly low. So remember, I said yesterday, these lows are untapped. So, maybe we get a true triple tap, where, I kind of mentioned yesterday, this was a triple tap and it did send us to the low end of the range, but obviously again, bought back up. So maybe we do, come back up here into FOMC, and then we sell off after FOMC if we get hawkishness. And then of course, if Jerome Powell's dovish, I think in the off chance, then, getting above this level right here, which coincides with the first level where we got sold off, or the level that really sold us off back in late August, early July. And then, on the really good chance, we've got 28.1, which is obviously the high of the grayscale candle. So definitely, 28.1, 28 still plausible. You could see a lot of people get short in this area, and then we have one more squeeze higher before heading lower. So that's definitely plausible as well. So what I'm looking for to trade is a sweep. Let me get rid of these so I can just kind of give you the exact what I would like to jump into. Actually, we'll leave the Monday high and the Monday low because those are critical. So what I'd like to short is this. We spike up, maybe we tag 27.6, up here, but basically anything in this kind of area right here, if we end up, dropping back down relatively quickly, I'll short there at a stop at the recent high, and then I'll look to target the weekly low, which is also the Monday low. And so that would be ideal. But in the off chance that we confirm above this level right here, then I'll look for longs above 27.6 up to 28.1. So basically, this is kind of my little demand zone here. We spike up and get shot back down. I'm shorting. If we reclaim 27.6, then I'll long up to 28.1, and then we'll make another decision from there. We could see a spike higher and then a drop lower. So definitely some optionality there, but very interesting that the OI is just closing heading into FOMC. Obviously, a lot of OI could come back after FOMC, but there's just some concerning signals that I'm noticing. And just to kind of bring it back to one thing that I did note yesterday, RSI did, still could be bullish. We definitely could get cut back here, but definitely a feather in the cap for the bulls on the momentum side of things. So I would be careful fading this too quickly, and that's why I'm just kind of waiting for FOMC. There's no reason to jump in, get excited, pick a true direction. We'll wait to see what Jerome Powell says. Got a couple of signals on both the bullish and the bearish side of things. Let's see how that bearish divergence has ended up playing out so far. Remember, price moving higher, this is moving lower, so it could buck the divergence. Wouldn't be the first time, but this is still valid as it stands right now. So also something to consider. And then got this ugly kind of looking OI overhang, and obviously the OI trend is cut. Last time OI trend was cut, we actually just stayed flat and then moved higher. So that's not the biggest, most concerning thing in the world, but definitely something to keep an eye on. So looking at ETH, let's move. I think this kind of sets the stage for ETH. ETH BTC, we talked about this yesterday. It's gotten hurt pretty bad. And obviously it's continuing to form new yearly lows, obviously much lower than where it was when we spoke yesterday. And, this has got plenty of room to head down. So let's draw some candles, some lines here. So this is obviously the high of this range, right? And then I've got something at the low. So, if we do drop into here, this could be a lot of chop and a lot of squirreliness. But it would shock me if we didn't end up doing something like that as we head into the end of the year. And that's really only valid, of course, if we break below 059. But I think we're going to tag 059 sooner rather than later. So definitely something to keep an eye on. So back to the ETH chart. Let's move to the hourly, because daily there's nothing to glean from that right now, at least on an intraday perspective. So nothing crazy from ETH OI, been very flat since September 11th, when we kind of really started this rally. So something to watch there is, if OI does really start cranking up and price stays flat, then definitely going to be some volatility on the horizon. But I did close some ETH shorts. I was short ETH yesterday on the news that the SEC was going to start charging more decentralized and centralized exchanges. I closed this morning, kind of very similar to the idea of, kept seeing Bitcoin with those tweezers. ETH obviously, kept trying to, it did tag that 1618 level, which was my support level, and then obviously got bought back up. Couldn't, try to dump again, got bought back up, said, I'm just gonna step away. So look at what I'm looking at for ETH, and kind of the same context for Bitcoin is maybe a gradual, incline higher. We got the previous daily close sitting at 1643. We got the VWAP sitting at 1640. We also have this resistance level at 1645. So big confluence here. I'd like to short to spike up here, on FOMC, and then, kind of similar to the Bitcoin demand zone up here, is I'd like to short, spike up into this level. And then if we sweep this level, previous daily close, 1645, 1640, drop back down, then I'm going to short it. Obviously, first target would be that 1618 again, but then the next target would be similar to what I said for Bitcoin, is that weekly low, which is also the Monday low, hovering right around 1603. So ideally, I'd like to get something like this, kind of cut the trade here, or possibly ride it lower. Maybe it's not going to look like that. That's pretty crazy, but it is FOMC day, so you never know. So ideally, what I'd like to get, is basically a lower high. See we're forming a lower high here, lower high here. I'd like it to form another lower high here, and then short that back down to at least this level. And then if things get crazy, we could obviously end up heading lower, or this is a really good buyback area. So then maybe it jumps up for another lower high, right around maybe the 1 hour estimated trailing moving average is kind of moving here. So we drop short, long, and then, short on another break. So a couple ideas there. That's obviously all depending on a hawkish Fed. So, the bullish case, if Jerome Powell comes out dovish, then obviously above here, probably going to end up, tagging the area that I wanted. But then if we break above that area, I'll probably long at least up to the recent high, or possibly, if we break above that high, quickly, then, we could probably jump up to the 1700 area. We definitely have some resistance here. Actually, I don't even think this line is that valid. Oh no, this line coincides here. This line, I think this is kind of a red herring, because you've got this whole fair value gap right here that I think is more useful. So if you get above 1665, then you pretty much got a nice little ride up to this demand zone up here around 1700. And, obviously 1700, very nice round number. So I think, we probably drift up a little bit heading in FOMC, maybe a spike. And then depending on what happens with that spike, if we have a very quick sell-off, again, my demand zone areas, I'm looking for shorts, 1640, 1645. I'm looking for shorts for Bitcoin around 27.5, 27.6, right up in this level. So that's what I'm looking for. And then, of course, if we do get the dovishness, if we break above the areas where I'm looking to short, then I'll just flip my bias. I'll go long and then try and ride that wave and close out. And then, obviously, if we have rejections, if we do make it, all the way up here, and then we do something like this and then reject hard, then I'll short looking for at least this high, or again, the Monday low. Don't count out, some possible volatility on the heels of FOMC with everybody getting horny, and then market makers crushing them back lower. So still got my eye on this Monday low. As you'll just to kind of play it back. On that last Sunday we dumped, but then we made it back up to the Monday high. It took all, actually didn't even really take that long. We dumped Monday and then we immediately made it back to that high. So don't act like that's not possible, even if we do head higher to then, end up grabbing the Monday low. Because, although we never ended up grabbing this low, we did, grab the high after we dumped. And so since we've left this, kind of standing there and we're kind of looking like we want to move higher, maybe we do move higher, but then maybe we grab that low again. So we'll have to see what happens, but definitely a lot of possibilities in the charts, and Jerome Powell is going to be the one who gives us our future. So, my main advice is after, the rate hike is going to be 0%. There's going to be no hike. It's what Jerome Powell says. So look out for, pleased with inflation, pleased with unemployment, future rate hikes, data dependency, more work to do, less work to do. Just kind of, if they're not pleased or they think more work needs to be done, that's hawkish. If they are pleased and less work needs to be done, that's dovish. So, there's going to be, some confusing language in there, and, whatever you see on the charts in the first 30 minutes is going to be crazy. But, just remember, listen to what he says, be patient, don't jump into things. This is a day where a lot of people end up getting hurt, which is why I always suggest play it afterwards. Don't play it before. We'll see how things end up. So good luck. Happy trading. See everybody tomorrow. And shout out Richard for saying good morning or hello in the chat every day. Appreciate that, Richard. Talk to everyone tomorrow.